I'd like to talk about will planning for business assets. I'm often asked by clients with business assets the best way of leaving their business assets to make sure that they pay as little inheritance tax as possible. I'm also asked about how best they can ensure the company continues to operate or perhaps liquidates and gets the best sale. There's many aspects to will planning for business assets that we can go into and discuss, but for the purposes of this, we'll be concentrating on business property relief, or business relief as it's also called. Business property relief is a relief against inheritance tax for those businesses that qualify as mainly or wholly undertaking a trading operation. So it's not available for business assets that essentially means to holding investments. It's not available for foreign assets, or foreign business assets either. So it's exclusively for assets in the United Kingdom where the owner of the business has held it for 2 years or more at the point of death and is involved in doing something, whether it's a bakery or a butcher's, or it has a purpose. It could be a marketing company, it could be whatever, but it's just not solely or more than 50% of its value is not in relation to the assets that it holds as opposed to what it does. The purpose of business property relief is to ensure that businesses can continue and aren't unduly affected by an inheritance tax liability. There is an opportunity within your will planning strategies to take advantage of the relief on first death of where it's a couple to ensure that the assets left tax efficiently. The way planning works for business property relief is that we ensure we use the relief when it's available. So in the scenario where a married couple come to me and maybe the business is in one name and not the other, the person who dies owning the business asset can place within their will a discretionary trust to receive the business assets and utilise that relief. Whereas if they were just to leave it to their surviving spouse, the spousal exemption would kick in and the business property relief wouldn't be useful. By placing the asset into a discretionary trust, it provides a safe space outside of the estate of the surviving spouse to hold those assets. If the business assets are sold and they become cash, then obviously the relief is lost. If that happens in the survivor's estate, then that's increased the survivor's estate for inheritance tax and potentially at 40%. So the assets of the business go into the discretionary trust. If they're then sold, the proceeds are held within the discretionary trust outside of the survivor's estate. If the survivor has funds in their own name or otherwise available to them, they can buy back the business asset from the trust and have the business asset again in their estate. If they hold that business asset for 2 years or more at the time of their death, then they could qualify for the relief again. That's utilising the relief twice on the same asset whilst getting the equivalent value out of the survivor's estate. So really quite good planning. It's called double dipping, and it is something that people ought to be aware of when the business assets can be continued to run forward. If you do have business assets in your estate and you want to know how you can leave them efficiently and ensure that you get the most value from the hard work that you've put into to achieve the business assets, please get in touch.